so I'm going to kick off with business tax. So first of all, good news for self-employed people in that the self-employed income support scheme has been extended, and the government have announced grants 4 and 5. The fourth grant is going to cover the months February to April 21, and people can claim it from late April 21. It's going to be calculated in a similar fashion to the previous grants, in that it's going to be 80% of 3 months average trading profits, subject to a 7,500 cap. Just to be clear, that this isn't available if you had average trading profits over the last 3 years of more than 50,000. This time you need to have filed 2019-20 tax return prior to the 3rd of March 21, and that's actually good news for newly self-employed people, because it means that people that were newly self-employed from April 19 now qualify for this grant, whereas before they didn't. The 5th grant has also been announced to cover the months from May to September 21, which can be claimed from late July. The way this is calculated is going to be different. It's going to be subject to a turnover test. So if your turnover has fallen by less than 30%, you're going to receive just a 30% grant, and that's going to be capped at a payment of 2,850. Okay, moving on to restart grants. I think these have been brought in to support the recovery of the high street as the trading restrictions are relaxed. It's basically going to provide a grant of up to 18,000 per premises for hospitality, leisure, personal care and gym type businesses, and a grant of up to 6,000 for non-essential retail. So a bit of good news there for the high street. Next slide, please. Okay, moving on to corporation tax. I think everyone was expecting there was going to be a rise in corporation tax, but I'm not sure people are expecting that we're going to get the biggest rise to corporation tax since 1974. So this table here just sets out the changes. The changes won't come into effect until April 23. And when they do come into effect, really small companies with profits up to 50,000 will still continue to benefit from the 19% rate. But we're now going to have this main rate of 25% for companies that have got profits over £250,000. And for companies that have got profits sitting in the bracket 50,000 to 250,000, they're going to pay at the main rate of 25% less marginal relief. And in this regard, we're going to have a return of the old associated company rule. So that means that all these limits are going to be divided by 1 plus the number of associated companies. And very broadly, associated companies are companies that are under the control of the same persons or persons. So if you've got associated companies, then these higher rates of corporation tax are going to kick in at lower levels of profit. Next slide, please. And just looking at the impact of the increase in the CT rate on remuneration planning, actually, if you just isolate the profits that fall in the 50,000 to 250,000 range, actually the effective tax rate on those profits is 26.5%. Now, I think people are going to have to revisit their remuneration planning and profit extraction strategies, because up until now, dividends have been the most tax efficient way of taking your profits out. But now it's going to shift perhaps towards a balancing act. So there could be a mixture of bonuses and salaries in order to optimise the tax position. And again, it's going to have to be looked at on a case-by-case basis, but we would sort of urge people to start thinking about this now in order to get the appropriate strategy in place. And of course, we're happy to talk to people about that if they want to. Next slide, please. Okay, so we've had some good news with regards to trading losses with an extension to the carryback rules. Usually you can have an unlimited carryback to the previous year, but you don't normally get a carryback beyond that unless you're a sole trader or partner in the early years of a business, or you've got terminal losses on cessation. So what these rules have done is effectively extended the loss carryback period from 1 year to 3 years for accounting periods ending between April 20 and March 22 for companies, and for unincorporated businesses for the tax years ended 5th of April 21 and 5th of April 22. So in effect, it's going to enable a refund of tax paid pre-COVID. So the way this is going to work is we're going to continue to have an unlimited carryback of trading losses to the prior year. But if we've still got any trading losses left after that, then we can go back to the previous 2 years. However, a £2 million cap does apply in respect of any carryback to those earlier 2 years. And also, the 2 million cap applies on a group-wide basis. So if you've got a group of companies, that £2 million cap applies across the group. But I think it's definitely good news given the current climate, that there's more scope to carry losses back and get some tax refunds where possible.